Hello everyone, I'm Shane Vernier, market analyst over at howtotrade.com. 2023 has opened with a bang as the markets have actively priced a multitude of uncertainties. At the top of this list of unknowns are inflation, employment, monetary policy, and geopolitical tensions. There's no doubt about it. The first 2 weeks of the trading year have been a fantastic time to be in the markets. So what does week 3 2023 hold? Are we in for more volatility, or are the markets due to return to a relative calm? Well, don't take a vacation anytime soon. The coming 5 days feature a collection of market drivers equipped to drive participation to the forex, shares, commodities, and cryptocurrency markets. Now, on the heels of last week's US CPI release, traders and investors are all wondering one thing: is inflation now in check? US CPI for December came in at 6.5% year over year and negative 0.1% month over month. Both of these figures were on schedule and point to another Fed rate hike of 25 basis points at the February meeting. Okay, so consumer prices are coming down in the US. What about on the global scene? Well, inflation metrics from the UK, Germany, Canada, and EU are this week's headliners. On top of that, the Bank of Japan is due to release its interest rate decision, highlighting midweek trade. All in all, the action should be steady from Monday's Asia Pacific Open to Friday's New York closing bell. Now let's check in with analyst Connor Woods for his insights on the key events and markets to watch for the third full trading week of 2023.
Okay, so with Monday being a bank holiday in the US, I think market participation is set to be, quite restricted. However, this could open up a very interesting European session. There are a couple of low key events in the form of French budget balance and German wholesale price index. That isn't likely to cause much volatility, but we may see some opportunities here on the Euro GBP chart. And I've got my drawings here on the chart. And the reason I've drawn this in is this was a take profit target that I had at 88769. That's been hit and we were stuck in this range previously. And you can see where we had this fake out. And now we've actually, I think, broken out to the top side of this range on the 4-hour chart. So for me, there's two levels to watch out for. My main buying area would be around 87900. But also I'm having a look at this level as well to see if 88537 can hold as well as a potential demand zone. So they're my two levels to watch out for Euro Sterling to the top side on Monday. Now Tuesday is much more like it. We have China releasing its gross domestic product figures, and this is the primary tool for measuring economic growth. Last time out, the report came in an impressive 3.9%. Now, it will be the Canadian dollar pairs, I think, where traders may find, the most joy as the inflation data is due out there. Will inflation show to be moderating like it has been in the US? The Canadian dollar has been weakening recently, and traders may turn to USD CAD, maybe to spike to the upside if that move is overdone. So let's have a look at that market now. If I get these drawings up on the chart, you can see, for me, I still have longer term targets at 37063 because we've got clear liquidity there and we've got a clear supply zone which was failed to actually be retested. And for me, this is potentially a really, really nice discounted level. Now, in order for this to work, we need really 33109, this sort of support zone to hold. Because if we get a solid close below 2260 and those bears really pile in, then we're sort of on a one-way ticket to the 200-day moving average. So look out for this area potentially to hold. And I think the targets to the top side are quite high. Now, Wednesday for me is likely to be labelled as probably the most volatile day of the week, with a whole host of economic data to be released to the public. None are more important in my opinion than the UK CPI report, with inflation at a staggering 10.7% in the UK. Then later on in the day, the US will release the PPI and retail sales data, both set to have high impacts on the markets. So for me, look no further than GBP USD, also known as cable, on Wednesday, which really has shifted momentum to the upside in recent weeks. Is this move overstretched? If I get my drawings up on the chart now, get those moving averages coming in as well, you can see we've got that moving average cross, which is that momentum shift to the top side. And you can see that we reacted perfectly from this demand zone, then started to trade higher, and you can see we were stuck in this range for the majority of last week. We were stuck in this range, and twice we've tried to either break below or break above. So how we react on Wednesday is going to be really, really crucial. If we can get any daily candle closures above this high, then I think we're going to unlock some of this candle imbalance and potentially head up towards 23688. If we can get a close below, then I do believe that the momentum will start to shift in GBP USD off the back potentially of a stronger dollar, which has been hurt recently. Now then, traders may look on Thursday to turn to commodities because we have the crude oil inventories figures being released, and despite really a broadly weakening dollar, I think crude oil prices have been really stuck in this range between $72 and $82 since early December really. Last time out, the inventory figures come in at 19 million barrels. Surely it won't be as high this time. Any turnaround in the dollar index could cause, that breakout below $72 in the crude oil market. But you can see this range I'm talking about and that we've been stuck in. And let me get my drawings back up on the chart here. Now for me, when we look at what's actually happened, you can see that we're now starting to run into this 50-day moving average. Is that going to act as resistance? Are we going to continue to get this range play? Because we can profit from range plays if we look to the top side to sell and the bottom side to buy from key sort of supply and demand zones. Now on the 4-hour chart, you can see that there's a key supply zone here which was wicked into, liquidity taken, and we've moved lower. So for me, this is bearish price action. And what we had below is we've had a failure to actually test this demand zone here. So I'm expecting potentially that stronger dollar to come into play, and then we can look to potentially test at least this 71.4 level sometime next week. Now the week ends with various, I'd say, medium impact events. However, I think it's going to be the speech from the FOMC member Christopher Waller, which is going to really cause some headlines. As always, when an FOMC member speaks, it's important to sort of decipher any interest rate clues. As it stands, the market is priced in a 25 basis point hike from the Federal Reserve at the next meeting. This is being treated as dovish for stocks, but how far can this bull run really go? So my key market here is definitely going to be my favourite, the S&P 500. When I get my markings back up on the chart, you can see this is that 2022 trend line coming into play. We've just about closed, above the 200-day moving average, but we're sort of flirting around it. We're coming into contact with that 2022 trend line. We've filled this market imbalance now, so we can get rid of that. We've reacted cleanly from this demand zone, so it points to short-term bullish price action, but we're now entering real restrictive territories, and I'm thinking around this 4,000 flat level to act as resistance for this market. And if we can get any dojis on the daily candle and then a snap lower, we could see a move like we saw back in the middle of December. My targets for the S&P 500 still remain down at around 3,400 and potentially 3,000 in the long run.
As the old saying goes, money never sleeps. That is certainly true this week as we are loaded up with an economic calendar chock full of market-moving events. Opportunity will be afoot for those willing to capitalize on the action. Be sure to stop by the trading room and check out a live stream or two. Nick, Connor, and I will bring 6+ streams per day, breaking down the key events and price action as they unfold. In addition, we're excited about our new How to Trade Squawk feature, which gives the room real-time audio updates throughout the trading day. Feel free to check it out if you get a chance. Now, the team at How to Trade can't wait to dive into the third trading week of the new year. Until then, trade the action well, and we'll see you on our next live stream.